What is going on, traders? Even though we are nearing the end of the year, there is no shortage of opportunity in the market. So in this video, I want to give you a much needed breakdown of where we are in the stock market from a technical and fundamental perspective, and more importantly, what opportunities from an investing and trading standpoint that I see. Good to be back on YouTube after a 2-week hiatus, although I was trading with the group every single day, taking advantage of the opportunities that we see. And for those that are curious about what those day trading sessions look like, stay tuned till the end of the video. I'll post one there for you. Let's get right into it. So we are currently 0.7% away from all-time highs on the S&P 500 and less than 2% away from the $7,000 psychological target on the S&P 500. Now, we are dealing with a very nuanced market. So if we take a look at the VIX absolutely crushed below 16. This indicates that the market is not really in a fearful mode anymore. And if we take a look at the VIX over VIX 3-month, a metric which I've shared with you multiple times on this channel, we are now at 0.8, which is where we want to hover if we want an indication that the market is not really expecting volatility in the short term. When the VIX over VIX 3-month is above 1, which we did hit in October as well as November, this means that the current volatility is much higher than what the market projects in 3 months. That is a sign that we are dealing with a very fearful environment, and that seems to have dissipated according to the VIX. So just because we are not in peak fear does not mean that the market is risk on. One of the most important signals, at least one of the most important signals to me that I use to determine whether the market is in a risk on appetite, is crypto. So if you take a look at Bitcoin and Ethereum, we are still hovering here near the levels where Bitcoin almost broke market structure and Ethereum actually did break market structure to the upside. But in my opinion, Ethereum needs to get over this 3,200 level here, and Bitcoin needs to get above this 94,000 level here for me to determine that the market is shifting towards a risk-on environment towards the end of the year. Now, in my opinion, Ethereum actually looks a little bit better from a setup perspective than Bitcoin, and you can trade this in a multitude of ways, which we will get into when I talk about the opportunities. And speaking of the end of the year, typically mid-December to end of December is one of the best times in the market. If we take a look at it from 1950 to 2024, the average gain is 1.5% between the middle of December and the end of December. If we were to repeat that, that would take us very close to the 7,000 target on the S&P 500. Now, in terms of data, we do have a little bit of lagging data coming up before the Fed meeting on Wednesday, December 10th. So we do have JOLTS job openings coming on December 9th, which is Tuesday. However, this will not be for October, as the government confirmed that we will not be getting October numbers. So we are going to be getting the JOLTS job openings for September and the JOLTS job openings for November, thereby skipping October's numbers. And then on Wednesday, December 10th, we have the Fed funds rate. Now, the Fed will likely do a cut, as this is already priced in by almost 90%. And when we were going through that bout of volatility in the market, it was mostly due to the fact that we didn't have data, and that the chances of a rate cut went from 90% down to 30%, back up to now 86%. However, I don't think that it is all smooth sailing, as just because the Fed cuts, it doesn't mean that there won't be commentary that is hawkish. There are definitely deep divisions within the Fed, between the different Fed members and between the head, Jerome Powell, about what the state of the economy is. Now, if the Fed is hawkish, I don't know if that makes a huge difference, because we all know that the Fed chief, Jerome Powell, is out next year and will be replaced by a Trump-friendly Fed chief. But what the Fed says in their messaging is something that cannot really be predicted. However, I do think that the Fed is going to cut on Wednesday, December 10th. There's also the issue of the Fed balance sheet. Will they announce a stoppage of quantitative tightening, which is rolling assets off of their balance sheet on December 10th? But regardless, I think the next 3 months are going to deliver some of the best trading conditions, both from a swing trading perspective as well as a day trading perspective, and even some investment opportunities that I will get into, and investments that we've already made as well, which I will talk about. Because when the S&P 500 rallies at least 20%, then does a quick 5% correction that recovers fairly quickly, there is still a little bit of volatility left in the market for the upcoming weeks. However, 3 months later, the stats on this type of behavior is very promising. So if we do get a little bit of a rough patch, and notice these are not corrections, these are just little pullbacks, but if we can align that with what we see on the charts and the levels that we trade from, like for instance, these pullback opportunities on Hood, which is one of our best winners recently, or from a day trading perspective, as we day trade the indices as well as commodities like gold every single day, then the market is a gold mine for those that are able to manage the risk. So let's get into the opportunities. Here are some of the setups that I'm looking at, as well as some of the long-term stocks that I am looking to pick up or have picked up already. But before I get into it, if you are looking to day trade with us and you want to day trade futures, but you do not want to put up your own capital, I suggest going the prop firm route or the funded route. I did an absolutely free 3-hour course here on YouTube on how to day trade futures. And if you want to take advantage of that knowledge, then I suggest you get a prop firm account. And right now I'm currently trading with Funded Next. It is the only prop firm that I know where the profit target and the maximum loss limit are 1-to-1. You will not find this anywhere in the prop space. There's also no daily loss limit and no activation fee. So this is your price all in. And if you use the code TTT, you could take an additional 10% off any of these futures plans. The great thing about Funded Next is there is no max withdrawal limit and there is no buffer required like some of the other prop firms. So don't use your own capital. Make sure you sign up for an account with Funded Next and use the code TTT for 10% off. So from an investment perspective, Meta to me was the most obvious pickup below 600. And of course, when Meta hit 700, we're going to get a wave of people saying, is it too late to buy Meta? In just 2 weeks, Meta increased by $100 a share as the market realized that it was undervalued. As I stated in the Discord, it was trading at a 23 PE and a price to free cash flow ratio of 28, both of which were the lowest in Meta's recent history. Its free cash flow yield is also 3.56%, which is the highest in history. As I said in my analysis, the knock on Meta right now is its absurd spending habits, just like it was back in the metaverse days. The market needs to be confident that either Meta will cut back on spending or start profiting off its purchases. Either way, it's the cheapest of the Mag 7s right now. And just like that, last week it was announced that Meta is cutting back significantly on the metaverse and Reality Labs. So if you combine those strong numbers with the fact that Meta is now cutting its spending, think of the positive impact that will have on its earnings going forward, as well as its ability to buy back its own stock. Robinhood was an absolute steal, near $100, and in 2 weeks, that jumped up $32 per share. This is a stock that we invested in, but also a stock that I continue to swing trade because it is providing a textbook pullback and retest opportunity here. You can see here that we closed our runners on Robinhood at 80% profits. We had bought the 125 calls expiring January 16th. Robinhood with a perfect breakout from this downtrend from October, shifting market structure to the bullish side. Just a typical break and retest here. Now, if I pull up the 50-day moving average, you can see that Robinhood is still hovering around there, but if we get a breakout here, then I think Robinhood makes all-time highs pretty soon. Now, another stock that we picked up and that I'm interested in continuing to dollar cost average in is Netflix. So if you look at this trend line here for Netflix, let me just remove the moving averages since they're a little bit distracting. You could see here that this trend line is the same trend line that hit the 2023 correction. This is the same trend line that upheld the April Liberation Day correction, as well as the 2022 bear market bottom. So this is a very significant trend line. And if we measure the fib here from this cycle, you could see that we are currently sitting at the golden pocket on Netflix. Now, Netflix was in talks to buy pieces of Warner Brothers Discovery, and the deal was valued at $72 billion. So anytime a company spends that much money, especially the most money that it's ever spent, you're going to see a stock drop off. But this is providing a discount for the future, in my opinion, as Netflix continues to expand and become a powerhouse. In terms of valuation, it's trading at a 42 PE with a 32 forward PE, which is assuming 15% earnings growth. It is not insanely undervalued. It is probably fair valued for Netflix. Gross margins are strong though at 48%, and it has a 5-year compound annual growth rate for revenue at almost 12%, 33% for net income, 34% for earnings. So it is a fair price for Netflix at this level. But if the acquisition of Warner Brothers as well as some the DC franchise, if that has a positive impact on its earnings going forward beyond this 15% earnings growth, then this is definitely an undervalued area for Netflix. I think it potentially could drop to the 90s or 80s, at which point I will dollar cost average, but I do like the company here. Netflix is also seen as a defensive stock, as when recessions hit, movies and alcohol companies take the least hit in terms of the economy. Another swing trade that we took advantage of was Tesla. So Tesla was consolidating here, and when we dropped, this was a manipulation drop to near the 100-day moving average. Again, if we pull up the fib, you'll see that this is at the golden pocket as well. But if we combine that with a trend line, this is what allowed us to take the swing trade on Tesla. So when we broke this and retested this trend line, we bought the January 16th 425 calls for a swing. Now, looking at Tesla, best case scenario to re-enter these is if we get a retest of this imbalance near the 50-day moving average for a trade back to the 470s. You could see for the December 19th strike that the most gamma exposure on Tesla is actually at the 500 strike here. Now, we do have a lot of call walls to break in order to get to that, but these can precipitate pretty quickly if Tesla convincingly gets above these levels, as market makers will have to reposition themselves by buying stock against their short calls. Another thing to note on Tesla is there is almost no negative gamma exposure on Tesla. Most of the gamma is on the positive side. So I think that fairly presents a low risk, high reward setup for Tesla, especially if you get these pullback and retests to major levels. Now, these are just some of the trades and investments that we made. We also had a position on Coin. We also had a position on Uber. Both, in my opinion, were undervalued from a fundamental perspective. And the last swing that we lost on was BMNR, which looks like it could be recovering. Again, we need Ethereum, in my opinion, to recover in order for the market to give us a signal that it is risk on, but also for some of these crypto derivative plays. And BMNR looks like it could be an opportunity again. Again, I took an L on this play, but I might re-enter this depending on what Ethereum market structure looks like. So if you want the full breakdown of what I'm buying for long-term investments, what I'm swing trading with the full key levels and my entries in real time, sign up. Link is in the description below. Come join the Traveling Trader Academy and day trade live with me every single day. As I said, I'll put a clip towards the end of the video of how those day trade live streams go. Make sure you watch the free 3-hour course on how to day trade futures. And if you want to day trade futures, make sure that you get a prop account with Funded Next. I also have yet to drop the 3-hour free course that I did on option swing trades. Actually, let me know in the comment section what I want to gauge the interest. Let me know if there's interest in a 3-hour course on how to swing trade options, how to select the strike price, expiration, how to determine key levels, how to look for the break and retest that are so vital to swing trades, how to set up your TP and stop limits. Let me know in the comment section. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace. So I got a much better entry in my Thinkorswim account, and I entered 3 contracts versus 1 in my prop accounts because I have to manage risk a lot more precisely in the prop since it has more rules, obviously. But I'm looking to see if we can get a long here off this 15-minute imbalance into that protruding high right there, especially after we had this divergence between NQ and ES. This is bullish divergence here. Beautiful move. 1400 now on Thinkorswim. Might take one off there. Let's see if we can push into 761. ES hit that high. I'm gonna take one more off here. All right, I'm taking this off here. Not gonna be a dig for a tick. Nice little respectable 2200 on Thinkorswim. 720-ish on prop, copied across 5 accounts. That was my only trade for the day. Now I'm gonna hit the slopes, even though we desperately need some snow here.